I know you were at Investor Day yesterday. Were you sold by what Lisa Su was saying about the compound annual growth rate?
So I certainly think AMD has the deals. I think that when Lisa's given us numbers, AMD hasn't missed those numbers. My only concern is AI has proven really difficult. So you look at MI250, that took longer to ramp than the deals that AMD had would suggest. You look at NVIDIA with Blackwell. I mean, certainly they've grown revenues, but the transition wasn't as smooth as they wanted it to be. And so it's mostly just, what's the timing around execution? And that's hard to say until they get the product out, and they get the product out 9 months, a year from now.
I would be remiss, Matt, if I did not move you beyond Investor Day yesterday to this chorus of voices we're hearing. We heard it from Cramer. You heard it at the beginning of the half hour. That he's saying, look, the debt financing here is cause for concern. The Wall Street Journal has a front page story this morning calling it Frankenstein financing. How concerned should investors be about the ways debt is coming into play with these companies and the data centers and the investments?
Yeah, and so I think just the concern is if you can't drive revenue and profit, it becomes a problem if you have debt, because then you can't pay for your debt. Now, having said that, what we've started to see over the last 3-4 months is that there's been a huge increase in inference. And inference is the use cases that drive real revenue for the cloud players and the neo clouds, and the model builders. Right, inference is the task that get things done. And so, I mean, it feels like right now we're also seeing monetization of AI, and that was the concern. If you'd asked me 12 months ago, is where's the revenue going to come from? All we're seeing is model building, and now it looks like we're seeing applications.
We're showing the banner right now that says Michael Burry accuses hyperscalers of artificially boosting earnings. I actually want to pull up what he posted on X, where he wrote that these hyperscalers are understating depreciation of AI chips, artificially boosting earnings, quote, one of the more common frauds of the modern era. He also promises that there will be more details coming on November 25th. He's had this back and forth with Palantir's Alex Karp, and Karp called him expletive crazy. Are you seeing any indication when you're looking at the financials of these companies that they're not factoring in the chip depreciation?
I think it's not that they're not factoring in the chip depreciation. The argument is that these chips are depreciating far faster than what we typically would see with normal server lives. So NVIDIA is coming out with new products, on a 2 to 3 year cadence, and they would say that the new products are a whole lot more efficient than the old products, and so the idea would be that after 2 to 3 years, that's the life of the chip. Now, what I would argue is to date, those older chips. So we're with Blackwell right now, but Hoppers are still being run. That they're still really good for inference. What's happening is the CSPs, they sell them on to smaller neo clouds, and if anything, over the last 6 to 9 months, the utilization rates of those smaller neo clouds that are buying these chips, they've gotten really high. So those chips still have life.
Meanwhile, AMD is trading at a multiple of 50 times forward earnings. NVIDIA is more like 33 times. Can AMD compete with NVIDIA?
I think at this point, it's can AMD be a legitimate second source? I think they have the best chance. And if they can grow at 35%, take double-digit share, which is what Lisa's put out as a goalpost. I mean, certainly they're the most likely, and if they hit those goals, they're going to grow really fast.